Hey guys, Mike here. So another jam-packed video for you, and a lot of news actually came out with the big mega cap stocks today. Some positive, some negative. We'll get into that. Also, three things to watch that's kind of taking place underneath the hood or behind the curtain, however you want to look at it. And so we're going to look at all that for you today. And if you look real quick here, we did have some decent news come out this morning when it comes to manufacturing. We ain't had some of that in a long time, but U.S. Empire State Manufacturing Survey, general business conditions. You see a nice big pop there. You actually see a lot of positive numbers. I think it was plus 25. And then, of course, the manufacturing survey number of employees. That actually stayed about the same. And so, we're looking at this cooling off of employment stuff, but it had a lot of good numbers, positive numbers for the orders, things like that we hadn't seen in a while. Now, again, you can see this thing bounces back and forth, right? I mean, that's pretty obvious when you look at it. And this is something I have never tracked before to see if you can see the economy slowing down. But when I thought about it, it makes sense, right? And it's adjusted retail sales for gasoline stations of all things. But if we're traveling, we're stopping in gas stations, right? And so if you look, we've been on a downtrend. There's no question about that. If you go back to other drawdowns, here's the dot-com bubble. You can see much less drawdown there. That was, of course, one of the weirdest crashes in history. Then, of course, you got '08, absolutely huge drawdown, okay? Then we move over 2015. There was no recession here. But again, the market saw a slowdown. And, of course, I guess the economy did too. Look at that. But we didn't hit a recession there. This is 2020 when we shut down the world. And this is where we're at now. And you can see that drawdown in anywhere near even the 2015 drawdown, let alone 2008 or anything like that. And so it's right at the dot-com bubble drawdown. But it definitely slows a slowdown, which might show we aren't traveling as much. Maybe we're not spending as much, right? And so I just want to put that out there. Let me know in the comments if you ever use something like that. And now this starts us into the three things that absolutely could affect stock prices. So just be aware of them. That's what I'm bringing this to you for. And you see fast money, big money. What they're trying to do now is they're placing short bets against basically every other currency but the dollar, right? So they're expecting a move up in the dollar and everything else to move down, okay? And the last time they did this was December 2021. And if we move over to the chart, you can see that was right here. That's when the dollar started going on its big run right there, as you can see. So big move up. We'll see if it pays off or not. I haven't really, if you know anything about why they believe the dollar is going to start pumping again, let us know in the comments. I couldn't really find anything on that. And the second one's going to be market liquidity. And this is something I track every single morning for the members here because I believe it's that important to do so because liquidity is what drives markets. And of course, everything in that column is what I update every single morning. But when you look at this chart, when I click on it here, you can see that the blue line right there represents the liquidity. There's always a 7 to 10 day delay. But when liquidity moves up, market moves up. When liquidity stalls out or starts to decrease, market kind of stalls out and starts to decrease as well. And if you go back and look at it, you can see there's always a delay. Move up in liquidity, and then about 7 to 10 days later, the market moves up with it. Decrease in liquidity, market moves down about 7 to 10 days. So that is extremely important to understand. And the reason why it's important is because now we got tax season coming around. So the general account for the treasury is starting to be filled. And plus we have the debt ceiling coming up, which the head of the House came out today and said, we might default on the debt, trying to put panic out there. So we'll see about that one. Pay close attention to that, though. And then you got right here what happened today. You got, look at this. Basically, at one point in time, all the indexes were green. The yields were green. The dollar was green. And even the VIX was green. The VIX ended up going red for the day. But everything was green. That's very strange, and it's not a common occurrence, right? And the yields is something you got to watch out here for because they've been moving up, especially the 3-month. But one thing that's happening, the reason why this is happening is this is a survey put out by economists. Not that I care about economists, but you can put it out by anybody. And if you look at what they took in 2023, January versus April of this year, they were saying, oh, the cuts are going to happen. Well, all of a sudden you're seeing Q2, Q3, Q4 of this year, a lot less of them think those cuts are coming. It shifted over to Q1 of 2024. And this is something you're seeing a lot because according to everybody, the cuts are right around the corner, like in July. So that ain't very far away. So let me know what you think in the comments about that. But this is going to affect yields. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. Now we're going to get into the charts. We'll start off with IWM. We talked about that yesterday. Had a great day today. And then we're going to talk about what basically saved the SPY because it's doing this V-shaped recovery all over again, okay? And if you look, IWM up 1.25% today. You see it gapped up. It was the only one that looked good at all, basically. We talked about this yesterday, how, money starts rotating out of the queues and other places that they got a lot of profit on, after this breakout right here. And again, it's been this chop box for a long time, okay? But this is small caps, what people's been worried about, because that is what drives the economy in America. And you can see, we talked about this yesterday, breakout, retest, boom. Now, if we get above this level right here, around 179 is going to be the big question right here. But if you go over to the IWM versus the SPY, we talked about this yesterday as well, you can see starting to get a little momentum, a little push behind it. And if we go over here, you can see exactly the performance that was had by the IWM versus everything else, right? Russell 2000 growth, Russell 2000 by itself, Russell 2000 value. All up 1.2 to 1.3%, and there's your NASDAQ. 0.3%, which was down, was red most of the day. S&P got saved at the end of the day, 0.3%. And if you look at the S&P, another green candle, right? Still just marching up, setting in this supply zone right here. Can it bust through? It's going to be the big question. And it's followed this trend line up going back since March. And so this is a bullish pattern right here moving up. So the bulls are in charge right now for sure. The other thing to look at is the volume, because that was the big thing in March. People were complaining about the volume. Well, you can clearly see the volume is picked up, right? The index hadn't moved as much, but the volume is picking up, okay? And when you look at what saved the S&P today and the performance and actually push it to go green, well, it's pretty obvious, all right? Real estate doubled anything else. That was surprising. Are you surprised about that? I know I was. Financials up 1%. A lot of them reporting earnings. The regionals aren't looking as bad as what people thought, plus the Fed's backing them anyway, and the Treasury, so it don't really matter. Then you had industrials, and then you had utilities. Losers, biggest one, 1.3 on the energy, comm services, and then a little bit on healthcare. Now that takes us to the VIX. Boy, the VIX, I guess it's still being suppressed or it's broken. Any of you VIX experts, feel free to speak up. But we hadn't seen levels like this in well over a year for sure. I mean, everybody keeps thinking it can't go lower. It continues to go lower. And it was up about 3% this morning. But every time somebody thinks it's going to be a breakout, it just didn't happen. And you can see, obviously, we get these norms coming through here, right? In 2017, 2018, it got down about 12 is where you would hit before you get a good bounce. 2019, 2020, you get around 15 to 16. And now, as I move this bar down, 17, some people are going predicting it's going to go down to 16. And so, big question is, do you think we're going to get a spike soon? We'll have to see. I did look at a chart today of the VIX divided by the VIX 3-month average. And usually when we hit a certain level, you start to get a pullback and a spike in the VIX, but we'll have to see on that one. I'm doing a video tomorrow for the members specifically on this, but let me know what you think in the comments. The Qs, if you look at the Qs, what are you seeing? Still coiling. It's gone nowhere since March 28th. Literally just nowhere. I mean, there it is. You tell me what you're seeing there, right? And this is going to be one of those ones where, again, the volume has increased, no doubt about that, April, but it just hasn't moved, right? And so you're starting to see dip buyers coming in, holding it up, but you're also no doubt seeing money rotate into IWM, right? Small caps. And so no doubt that's what you're seeing happen from at least big money. I don't know if retail is doing it. And so that'll be something to keep an eye on. The other thing to look at too is if you pull out on the daily with the moving averages, you got the 50 crossed a long time ago, but you also have the 100 crossing the 200. And it was Friday, I believe it was. And so, that's not a bearish thing. That is a bullish thing, right? And so, keep an eye on that. Now, here's where you get some big mega cap news. Google gaps down. Well, what in the heck happened, right? And it looks like it's the MACD is going to end up doing a bearish cross. Could be. But of course, what saved it was, if we go down here, you can see there's a reason why I put in the daily and weekly expected moves for these stocks, right? Weekly expected move, hit right on it. Bounced. I'm going to keep going down. You can see almost to the penny. Boom. Bounces. That's what saves it. So it's down there very close to a weekly expected move. And so usually you'll see a bounce and a savior, and that's what happened. Now what drove it down was simply this came out Sunday, and this fact that Microsoft search engine Bing might be getting chosen by Samsung over Google. Okay, might be is the key word, but that's all you need. And so that's 3 to 5 billion, I believe, in annual revenue. And so they're afraid they'll create a trend because they also have contract with Apple as well. So people kind of flipped out on that, but it was a decent recovery in a way. Now, Apple, you can see now, are we going to end up breaking down out of the rising wedge, or are we finally going to be able to get above and hold above the all-time high trend line? And you can see it keeps getting above it, but it just can't stay above it, right? And so now, believe it or not, Apple is getting into the savings business. They're going to start offering a savings account available at 4.15% APY if you have an Apple card. And so I'm like, oh, interesting. And they're going to, if you're wondering how they're going to do this, they're going to team up with Goldman Sachs because they're not a bank, obviously. Now, Tesla, don't have to show you the chart. Believe it or not, it's still sitting at that trend line, descending trend line that's always sitting at. Earnings are Wednesday. But here's the good news for Tesla, because everybody's worried about these EV credits and things like that. And when we look at the top 10 models eligible, you can see right there at the bottom, Tesla Model 3 and then the Tesla Model Y. Of course, Chevy has 4 of them, but at least they have a few that are actually going to be available to get the credit. And the big thing about this is, to be eligible for the full credit, the vehicle must be assembled in North America, and its battery components and critical minerals must come in increasing shares from Pacific countries, including but not wholly limited to the U.S. And the battery components portion requires manufacturing or assembly in North America. The critical minerals portion requires extraction or processing in the U.S. or a U.S. free trade agreement country. Let me know in the comments what you think about that. And that's going to lead us into earnings. And you had a lot of banks today. Schwab came out, things like that. They actually went up. They did say they're going to freeze their stock buyback program, which I was kind of surprised it stayed green. I thought, oh my goodness, they're not going to buy back stock? Oh, people flip out about that. But, they're not coming in. The earnings aren't coming in as bad as people think. And the truth is, when they're looking at these earnings too, they're looking at the backstop that has been put in place by the Fed. Okay, I mean, these banks have been borrowing billions of dollars, right? I don't know what they're doing with them. But again, you keep hearing the Fed and all these other people say, don't worry, people aren't going to lose on their deposits, okay? And so we'll see how this whole thing keeps going. Now, on the earnings coming out, obviously, got some big ones in the morning. Bank of America, Johnson & Johnson, Goldman Sachs, Lockheed Martin, more regional banks, okay? That's not a surprise. Then in the afternoon, the big one, Netflix. Put in the comments, are you playing it and which way you think it's going? Remember, you got that huge gap fill above. United, are we still traveling? Intuitive Surgicals, one people love to play. Again, more regional banks. Now, looking at the economic data, very easy here. You ready? All about the housing permits and the real estate business. And so, I don't see any of the economic news pushing the markets down for sure. Earnings, of course, depends on what B of A, Goldman Sachs, all of them say. We'll have to see on that. Nobody can predict what they're going to say. And so I don't see the economic news obviously pushing us down. The bank earnings, Bank of America, Goldman Sachs, things like that, absolutely could do it. But we'll have to pay attention. I was surprised to see Meta was actually down 1.18%. I think some people actually took some profit because, how many green days have I showed you with them just marching it on up to fill that gap above, which I think we all know is going to happen. But, it's kind of interesting. One of the members pointed out, if you just look at the actual ranges that the S&P and them and Qs have done, like at the start of April to now, it's been pretty mute, right? 80% of the time April's supposed to be green. That does not mean that it's going to be 10% green. It means it can literally be 0.01% green, and that counts as a green month. But again, but you got these big stocks like Apple and Microsoft and all of them just setting the either major resistance levels or need to push up to break out. The index are setting at major resistance levels or supply zones. And so it needs to try to push above that, but it needs something to, I guess, help push it in a way. And so, and especially if people are rotating money out and going into the IWM, the small caps, that don't really help the bigger indexes. So, let me know what you think about that down there in the comments and stuff. And again, got to keep an eye on liquidity. The dollar yields will be in full view for sure this week, because if yields start pumping, the dollar starts pumping, and liquidity don't move, it's not a good thing for the market. So we just got to keep that in mind, keep that on watch. Again, if you want to be updated on all that stuff, daily ranges, weekly ranges, feel free to sign up for a membership. Still less than the McDonald's combo, even with inflation coming down. How about that? So anyway, hope I talked a little more clearly for people. I do read the comments, and I tend to talk fast because I think fast, I walk fast, all that good stuff. So I tried. So anyway, let me know what you think in the comments. Give me some feedback. And also, if you're still with me, one day my wife said, why don't you take questions? And I mean like market questions, right? Not like what's my favorite color or anything, like what's my dog's name, whatever. But I thought about it. I was like, I'll give it a shot. So in the comments, or you can shoot me an email if you want to, MikeJonesInvesting@yahoo.com. Feel free to ask questions about the market or whatever it is, and I will try my best to come up with the answer if I don't have it. So give it a shot, see how it goes. Let me know what you think. Anyway, hit the like and subscribe button if you got anything out of this, and I will see you tomorrow.